and welcome to the reflection screencast for Task E of the Fodjan case study. So in this video, we will be covering the triggers relating to tax and auditing that were prevalent in this particular task. Okay, so what exactly are we going to be doing? So we are going to go through the pre-release information that is relevant to Task E, and we are going to then unpack the specific triggers that you needed to identify. Then we will discuss what work needs to be done with respect to the triggers for this particular task. Also included in our slide deck today is a high-level summary of the bare minimum technical principles that you need to have an understanding of in order to place yourself in a position where you are comfortable with completing this particular task. Okay, so let's get right into it. So now we are going to be looking at the documents that triggered the tax and auditing elements relating to Task E. So if we start with the background information that was included in the pre-release, there was a section relating to marketing funds, which is one of Fodjan's revenue streams, right? And also included in that background information is how these funds are then determined, including some rules and regulations regarding the utilization of these funds. Now, this was not a trigger in itself, but it gave some good context that will come in handy once we start unpacking the triggers. So let's read through the background information just to remind ourselves again of how the marketing funds are actually structured. So it reads as follows. Fodjan also charges franchisees a monthly marketing fee of 3% of the franchisee revenue, which is payable monthly in arrears. In terms of the franchise agreements, Fodjan is the custodian of these funds and is contractually obliged to spend these funds on advertising and marketing for the benefit of all franchisees in order to promote the Fodder's brand. Marketing activities include TV and digital advertising. Okay, so once again, this just gave us a nice background into the marketing funds, as well as the rules and regulations or requirements as per the franchise agreement relating to Fodjan and its franchisees. So let's go look at the specific documents that gave us the triggers. So document 5, ladies and gentlemen, is where you find the triggers for this task. Okay. This was an email from Elijah to you, the financial manager, regarding matters that arose from the meeting with the external auditors. Okay. So from paragraph 4 is where you start understanding what is going to be required of you. And it reads as follows. After the planning meeting, during an informal conversation with Basil over a cup of coffee, he mentioned that several of his clients are franchisees of Fodjan. They have been complaining that they have not seen much benefit from the campaigns run by our marketing team, despite their sizable financial contributions to the marketing fund over the many years. So once again, ladies and gentlemen, this is not telling us specifically what the trigger is, but it is just giving us more context as to why we are here. Okay, so the franchisees are complaining. So given the fact that they are complaining, this already sounds to me like you are going to need to verify something for them, right, to put them at ease. But like I said, this is not the trigger as yet, as there's no indication when it comes to what you're going to need to do. So let's read on further from this document. The last paragraph then reads, I would therefore also like you to apply your audit skills to the marketing expenditures incurred during the past 12 months. If there's anything that is questionable, I would like to know about it sooner rather than later. So that right there, ladies and gentlemen, is your first trigger, right? You are going to need to audit the marketing expenditures that have been incurred. So we will talk shortly about how you are going to need to tackle this particular trigger, but let's carry on reading as there's more coming from this particular paragraph. It then says, while you are busy with this, you might as well consider whether there are any tax issues relating to the marketing fund. For a long time now, I have left the marketing team to do their own thing from a financial perspective, but having heard Basil's comments, I definitely do not want to be accused by the board of neglecting my fiduciary duties. Okay, and it's in the second highlighted part where you find your second trigger, that is understanding the tax implications of the marketing funds in respect of this franchise agreement. And ladies and gentlemen, the reason why I say the trigger is understanding the tax implications of these franchise marketing funds is because you will not be able to know if there are any tax issues relating to the marketing funds if you don't have a good understanding of what the tax implications of these marketing funds are supposed to be in the first place. Okay, so as part of your research during your pre-release, you are going to need to make sure that you obtain an understanding of the tax treatment when it comes to the marketing funds. Okay. Before we move on from this document, I just want to highlight something that we find in the last paragraph, and it's highlighted in gray on my particular slide. So it says, while you are busy with this, and the reason why it's important and why I have highlighted this is because this shows you that there's two parts to this particular task, okay? So it talked firstly about applying your audit skills to the marketing expenditures, and then it said, while you are busy with this, I want you to then consider the tax, if there's any tax issues relating to the marketing fund. So this is important because when you are drafting your response come the day of the exam, that should remind you that you need to have two components that are addressed in your response. If you don't address all these components in your response, then you are going to be putting yourself at a great disadvantage. Okay. So now that we've understood what the triggers are, let's take a closer look at what you're going to be doing during your pre-release phase with respect to these triggers. Okay. So we are going to be looking at what actions you are going to need to take and what could the possible anticipated tasks be in relation to these particular triggers, right? So let's start with the first trigger, that is applying your audit skills to the marketing fund expenditures. So what you're going to do for this particular trigger is you need to obtain an understanding of the particular laws and regulations that are relating to the marketing expenditures in the franchise industry. Okay. So you are going to need to understand what are the specific requirements or what are the rules when it comes to spending marketing funds when it comes to franchise agreements. And why is this important, ladies and gentlemen? Once again, you cannot audit what you don't understand. So getting an understanding of these laws and regulations will enable you to identify the risks that are relating to the marketing funds. And this is important because remember, when we audit based on risks. Okay, we follow a risk-based approach when we are auditing. So getting an understanding of those rules and regulations will help you pinpoint where those risks are, and then help you then identify what the applicable response to those risks would possibly be. This is where your second action item will come into play during your pre-release phase. This is updating your understanding of the auditor's responses to assessed risks, okay? And this you will find in ISA 330, because once you understood the rules and regulations, you will be then be able to understand what are the risks when it comes to these marketing expenditures. And then ISA 330 will then give you guidance as to how to appropriately respond. In other words, how to appropriately then audit these marketing expenditures. So what are the types of tasks that you could come across or that could be expected of you on the day when it comes to this particular trigger? So you could be asked to identify the audit approach that is going to be used in auditing the marketing expenditures incurred, or you could be asked to identify the audit procedures to be performed in auditing the marketing expenditures incurred. So remember, there's a difference between audit approach and audit procedures. So this is one of those things that you're going to need to make sure that you research on and make sure you have a clear understanding of what an audit approach is versus what audit procedures are if you are then asked to do either or in the day of the exam. Okay. So let's look at then the second trigger. What are those actions that you are going to be doing during the pre-release phase? So you are going to need to understand the tax provisions relating to marketing funds that are earned, as well as the marketing funds that are spent by the franchisors in terms of the franchise agreements. So what are these tax provisions that you're going to be getting an understanding of? These are the income tax provisions, particularly looking at the gross income definition with respect to the marketing contributions that the franchisors receive. And then looking at the general deduction formula, this is with respect to the marketing expenditures that the franchisors then spend on marketing activities, as well as then the marketing expenditures that the franchisees themselves pay. So what is then the general deduction formula telling us in terms of the tax treatment in that perspective as well? So another thing that you're going to need to research on and consider is Section 24 Cap C, which deals with the allowance for future expenditure on contracts. And we'll talk shortly about why Section 24 Cap C could find application in this particular scenario. Okay. So in this trigger, because we were alerted to think about or consider any tax issues, so they were not specific as to what tax issues you are going to need to consider with respect to the marketing funds. So you needed to think about all possible taxes that could find application for this particular task. So in addition to the income tax provisions, you are going to need to think about VAT provisions that could be applicable. So think about any output tax or input tax implications with regards to the marketing fund expenditures. And another thing that you could also consider here is the VAT agent rules that you find in Section 54. And we'll also talk shortly about how the VAT agent rules could possibly find application in this particular scenario. Before we move on from this particular slide, let's then look at what possible tasks you could be required to do on the day of the exam when it comes to this particular trigger. So you could be asked to review the tax treatment of the marketing funds. So maybe they list down how they are currently treating these marketing funds from a tax perspective, and then you are asked to then review the tax treatment. This could either be from the perspective of the franchisor or the franchisees. So you need to be comfortable with the tax treatment from both sides, okay? Or you could be asked to prepare a report outlining the tax treatment of the marketing fund. So once again, from either the perspective of the franchisor or the franchisee. Okay. So this slide, ladies and gentlemen, just to summarize, it's telling us what actions we are going to need to be taking during that pre-release. So what are the things that we are going to need to be researching on? And it's giving us also what could be the possible tasks that you could be asked to then complete on the day of the exam. Okay, so now let us look at what are the specific technical principles that you are going to be looking at on a deeper level during your pre-release phase. Okay, so ladies and gentlemen, in the previous slide, when it comes to the auditing trigger, we spoke about the fact that you are going to need to obtain an understanding of the laws and regulations relating to marketing funds in the franchise industry. So you will note once you start researching on the laws and regulations relating to marketing funds that the marketing fund is governed by the franchise agreement. So now that we know that the marketing fund is governed by the franchise agreement, you now need to consider what does the franchise agreement between Fodjan and its franchisees actually entail, or what does it say? So if you remember from the background information, we read that Fodjan is contractually obliged to spend the funds on marketing and advertising for the benefit of all of the franchisees to promote the Fodder's brand. So the rules according to their franchise agreement is that those funds can only be spent on marketing and advertising for the benefit of all of the franchisees. So when you are reading through information on the day, you need to be careful now if a Fodjan starts using these funds that are sitting in this marketing pool for anything else other than marketing and advertising for the benefit of all franchisees. Okay. If you read further into the research on rules and regulations with respect to marketing funds, you will note that those marketing funds are regulated by the Consumer Protection Act. So you need to ask yourself, okay, what does the CPA say in terms of these marketing funds? Because now we know that they're regulated by the CPA as well. And the CPA then notes that the franchisor must provide the franchisee with an annual statement of account that sets out how the marketing or advertising funds have been spent. So already I can then decipher for myself that if on the day I'm asked to, for example, identify the audit procedures to be performed with respect to auditing these marketing funds, one of the documents that I can note for inspection is this annual statement of account, because the CPA requires that in terms of the rules and regulations. Okay. And then the CPA further notes that it requires that any contributions to a marketing or advertising fund must be reasonable. Okay, so the CPA says that any contributions to the marketing fund need to be reasonable. So that to me says that during my pre-release phase, I can already do some sort of analysis, because remember we were given the financial statements. So do some sort of analysis on these marketing funds, or marketing contributions rather, that Fodjan receives from the franchisees, to see year on year what has been the increase on these marketing contributions. Is it reasonable, maybe based on inflation? Or you can also research during the pre-release phase what other franchisors are doing out there in terms of the contributions, how much are they charging their franchisees, and I can do some sort of comparison with what we have been given with respect to Fodjan and see if it's reasonable. Okay. And then the CPA says that the franchisor must use the funds for the purposes for which they were collected. Okay, so that already says to me that, okay, there is a possible risk with these marketing contributions or funds in general, that they could be used for purposes other than what they were collected for. Okay, so this is a risk then that I would possibly need to address when I'm auditing these particular funds. So in Fodjan's case, if I'm asked for procedures, for example, I could ask for invoices, take a sample of those and read through the description of those invoices that have been paid and see whether they actually relate to marketing activities with respect to the franchise agreements. Okay. So once again, this is where then your ISA 330 can come into play, because now that you've understood what the possible risks could be, ISA 330 will then give you guidance as to how you can respond to these risks. And if you read through ISA 330, it could possibly tell you that, okay, for this type of risk, you would most likely do a substantive procedure approach. And like we said, or like I've actually explained to you, one of those substantive procedures that I could possibly think about is taking a sample of invoices and reading through the description to see what this payment actually related to. Did it actually relate to marketing activities for the benefit of the franchisees? Okay. So this is it, ladies and gentlemen, in terms of this particular slide, looking at the specific technical principles that you need to look deeper into, gaining an understanding of in order to successfully complete this particular element of this task. Okay. If we move on further into still your marketing expenditures relating to the auditing trigger, what are other stuff that you could possibly do during your pre-release phase? So given that the franchisees are complaining once again, a reasonability analysis could be quite useful. So you actually analyze the fund movements and see whether the money coming in versus the money leaving the fund and the balances actually make sense before your exam. Okay, so we have already spoken about that. The analysis could come into play because the CPA says that those marketing funds need to be reasonable, but also because the franchisees are complaining, then some sort of reasonability analysis it also comes into play there. Okay, so on the slide, I've given you a screenshot of FY 2021 information versus FY 2022 information, as was noted in the pre-release, and you can then analyze these numbers and see if the money coming in, as we said, versus the money that is leaving the fund and the balances at year end then make sense to you from an economic perspective. You could also consider if the funds earn interest or some sort of return prior to their application to the marketing expenditure. Okay, so we do know that the contributions are received and they are put aside. So when they are put aside before they're actually spent on any marketing initiatives, think about if the funds earn interest or some sort of return, and if they do, what is your expectation with regards to that return? Do you expect it to then be used once again for marketing activities, or can Fodjan actually use that return for themselves? And this is a beautiful point that you can link to the CPA requirements that says that the marketing funds need to be used for the purposes that they were intended. Okay, so on when you receive information for the day, this is also a consideration that you could try to read through and see if it's applicable for Fodjan. Okay. Now that we've spoken about the auditing trigger and looked into the details of what you're going to be doing, let's move on to the tax trigger and look at the details of the technical principles that you're going to be researching on. So starting off with the franchisor, remember that we said you're going to be looking at the income tax provisions. So income tax provisions would be your gross income definition, because the franchisors receive these contributions, right, from the franchisees. Okay. Remember, ladies and gentlemen, that the gross income definition has a lot of elements that you need to consider, or you need to make sure that are applicable before you can say a particular amount meets the definition of gross income. However, it is quite important for you to understand, based on the scenario and the case study, what could be the possible issue or the element within the gross income definition that I need to focus on and actually prove that it is applicable before I can say that these marketing contributions meet the definition of gross income. And in my mind, when I was reading through the case study and reading through marketing fund contributions, the real issue here is whether the gross income element relating to received by or accrued to is applicable. Okay, all the other ones, it's easy to relatively conclude on whether they are applicable, but your focus during the pre-release would be understanding whether, from the franchisor's perspective, have they actually received or accrued these marketing fund contributions for their own benefit. And then the case law that can assist you in coming up with this conclusion is the Hilden Hayes case or the Pyatt case. So you need to make sure that you read through the conclusions or the principles that came through from these cases and then apply them to these franchise agreements, and then conclude on whether you believe that the franchise or the marketing fund contributions rather have been received by the franchisors. Okay. Once you are then happy with your gross income definition, another element of your income tax provisions that you need to think about is your general deduction formula, because remember, with the franchisors, they then take these marketing expenditures or these marketing funds, and then they incur marketing expenditure with respect to marketing activities. So when they take this amount that they have received from the franchisors and actually pay to whichever supplier when it comes to marketing, do they qualify for a deduction with respect to those expenditures? So you need to look at the general deduction formula. Once again, just like the gross income definition that we've just done, your general deduction formula has a lot of requirements or a lot of elements that you need to consider before you can say, yes, that particular expenditure is deductible. However, only one particular element of that gross income, or rather that general deduction formula, is the real issue in this case. And the real issue is whether those expenditures have been incurred in the production of income for the purposes of trade. So this is the particular element that you are going to be focusing on. Once again, looking at case law that can assist you in concluding on whether those marketing expenditures that the franchisor then incurs are then incurred in the production of income. Okay, you don't have to on the day, if you are asked for the tax treatment with respect to those marketing fund expenditures, you don't have to go through each and every single element of the general deduction formula. Think about what the particular issue could possibly be, and like I said, the particular issue in this case is in the production of income for the purposes of trade. Okay. Section 24 Cap C, ladies and gentlemen, like I said earlier on, is another relevant section for this particular case study that you are going to research on. And why is that? Why do we say that Section 24 Cap C could possibly find application? So we were told, ladies and gentlemen, as part of the pre-release information, that in the balance sheet, Fodjan has a restricted cash balance, which represents the surplus cash in the marketing fund contributions, okay? So these are the marketing fund contributions not yet spent. So if we look at the requirements of Section 24 Cap C, so Section 24 Cap C allows a taxpayer to defer paying tax on income that accrues in terms of a contract when such income will be used to finance future expenditure. So in Fodjan's case, because we know that they have surplus cash, so marketing funds that have not yet been spent, we know that there is income that they are sitting with that is going to be used to finance future expenditure. So in future, they're actually going to spend this for marketing initiatives. And we know that this is in terms of a contract, right? They have a franchise agreement with the franchisees. So this is why we say Section 24 Cap C could find application. So what you are going to do during the pre-release is you are going to go into your Section 24 Cap C requirements. Make sure that you understand what those requirements are and how they actually apply to Fodjan, just as I've done with you now. And you are going to then conclude as to whether Section 24 Cap C is applicable or not. One thing that is quite important for Section 24 Cap C to note is that the expenditure must be expenditure which will be allowed as a deduction from income when incurred. So whatever sort of like deferment you are going to be getting in terms of Section 24 Cap C needs to be in respect of expenditure that will be allowed as a deduction when it is incurred. So once again, coming back to the general deduction formula and thinking about whether the expenditure that Fodjan is going to incur for these marketing initiatives is going to be deductible or not. Okay. Then if we then look at the franchisee's perspective, what are the income tax provisions that you are going to be doing or rather looking at? So the franchisees actually take their money and actually pay Fodjan for the marketing fund contributions. So in their case, you are going to be thinking about deductibility. Is this payment that they make to Fodjan actually deductible? And once again, looking at the general deduction formula, section 11A read together with section 23G. Once again, as I've already said, ladies and gentlemen, there's a lot of those requirements for the general deduction formula. But what are you going to do? You are going to specifically focus on the one that could be an issue. And this is whether the expenditure has been incurred in the production of income, because all those other elements is fairly easy for you to conclude on. So you don't need to spend as much time researching and going through case law for each of those other elements. Okay. Another great sort of like guidance that you need to research on and read in detail is the guide on the taxation of franchisors and franchisees that is issued by SARS. Okay, so if you go on and you research on SARS guidances, there is a particular guide on the taxation of franchisors and franchisees. And when you look at this guide, you are going to be focusing specifically on section 3.10. Okay, because this gives guidance on the income tax implications of advertising fees. Okay, so this can then assist you in confirming the income tax treatment to be determined in accordance with the guidance that we've already spoken about, right? So the guidance that you are already going to be looking at in terms of case law, etc. Once you have concluded, you can then look at this SARS guidance to see whether you are actually aligned with what the SARS guidance is telling you when it comes to those income tax implications for the franchisor and franchisees with respect to advertising fees. Okay, happiness. So ladies and gentlemen, remember we did say when we were looking at the high-level action items that because the trigger just said consider any tax issues, you have to think about all possible taxes. Another tax that you then need to think about is VAT, as we already mentioned. So what are you going to be doing during your pre-release? You are going to be thinking about, okay, what are the possible output tax implications with respect to the revenue that Fodjan receives? That is your contributions on the marketing funds. And then you're also going to be thinking about the income tax, the input tax implications when it comes to the marketing expenditures now that Fodjan actually spends when they spend money on these marketing initiatives. And then I mentioned that section 54, which deals with the agent rules with regards to VAT, could find application in this scenario. And why are we saying that it could find application? So given that Fodjan spends the marketing fund contributions that they received from the franchisees on marketing and advertising for the benefit of the franchisees, then you need to now consider whether Fodjan is acting on behalf of the franchisees such that they could be considered to be an agent. So what are you going to be doing during your pre-release to actually consider this? You are going to understand what is an agent defined as in terms of the VAT Act, okay? Once you've understood what an agent is defined as, you're going to then apply that to Fodjan's scenario and see whether Fodjan would then be considered to be an agent, okay? If you're then happy with your conclusion there, you are then going to move on to what are the rules and requirements for the VAT treatment of an agent versus a principal, okay? An overview, just to let you know, according to section 54.2, it indicates that any VAT supply that is made by a VAT vendor through an agent is deemed to have been made directly by the principal. So what does that actually mean? So it means that if you are an agent, then the agent cannot claim any input tax when it comes to expenditures, and it must not declare output tax when reimbursed by the principal. So if the principal, which is the franchisees, which could possibly be the franchisees in this case, if they give Fodjan some sort of money with regards to these marketing expenditures, so in other words, these marketing contributions that they make, then Fodjan cannot declare any output tax with respect to these marketing contributions. So you need to then sit down with the research and conclude for yourself whether you think that Fodjan could be regarded as an agent with respect to these marketing contributions. Also, something that you could think about as a possibility to note down is whether this is a complex area that perhaps requires expert advice. So as you are reading through those VAT implications, you could think about whether this is an area where you would need to get a VAT specialist to come in and actually give you further guidance on whether Fodjan meets the requirements of an agent or not. Okay. So that, ladies and gentlemen, then brings us to the end of this particular video where we have dissected the document 5, looked at the particular triggers relating to task E and what you are going to actually need to be doing during your pre-release phase. Okay, so all the best and good luck as you are actually tackling this particular task.